I think we are live now. Yes, we are live now. So, friends, indeed, a warm welcome to one and all. I see a PRATIK NEVE. Welcome all of you to ZEST Learning. Friends, ZEST means enthusiasm. Yes, so let us keep this enthusiasm. Let us go ahead and let us start solving sums. Today, we are going to discuss sums of input tax credit. I hope that you have understood all the sums that we have discussed till date. So your issue of getting hands on with sums of GST and customs is getting resolved and you are getting confident day by day. So friends, if you have not yet subscribed to our channel, please do subscribe to the channel, hit the bell icon so that you don't miss out on any such important videos. Remember, today is our session number 6. So earlier 5 sessions, go ahead and watch if you have not yet watched them. Okay. So we have done scope of supply, RCM, exemptions, time of supply, place of supply, value of supply. And now starting with ITC. So are you ready for input tax credit? So it is from page 61 to 91 and there are about 50 questions in this topic. Okay, let us start. So jumping to approximately pages 61. Yeah, let's start. So before going to ITC, let me tell you so section 7 of CGST Act is scope of supply, section 8 taxability of composite and mixed supply, section 9 levy and collection, 10 composition levy, 11 exemptions in GST, 12 time of supply of goods, 13 time of supply of services, 14 time of supply when there is change in rate of GST, 15 value of supply. But when you are doing 15 of CGST Act value of supply, you have to do rules also, that is 27 to 35 of CGST rules. Then 16 ITC eligibility and conditions. 17 ITC apportionment and blocked credits. 18 ITC in special circumstances. 19 ITC in case of job work. 20 ITC in case of input service distributor. Okay, and then 22 to 30 is registration under GST. Okay, so just section wise perspective, which all sections we have done. Section 7 scope of supply, which is to be read with 3 schedules. Schedule 1, okay, schedule 1 is certain activities called as supply even if they are without consideration. Schedule 2, some activities are called as supply of goods but not supply of services. Some activities are supply of services but not supply of goods. And schedule 3, the negative list. Negative list means some activities are neither supply of goods nor supply of services. So that's what 7 also we have done. 8 taxability of composite and mixed supply is also done. 9 levy and collection, which has reverse charge mechanism as well as liability of e-commerce operator to pay GST. That also done. Composition levy, section 10. Yes, while doing the sums in the first topic, we did composition levy also. Exemptions under GST section 11 completed, which is to be read with notification number 12 by 2017-CT for the exempted services. And then 12, 13, 14 time of supply done. Section 15 value of supply along with rules also done. Rule 27, rule 27 is for when the price is not the sole consideration. Rule 28, supplies between related persons or distinct persons. 29, principal supplying goods to agent. 30, residual, when you can't follow provisions of 27, 28, 29, go to 30. 31, again residuary, if you can't follow 30 also, go to 31. 32, valuation in some specified cases. What specified cases? Remember, 32.2 foreign exchange services, 32.3 air travel agent. 32.4, insurance, life insurance. 32.5, what is 32.5? Tell me. So 32.5 is second hand goods. So, sale of second hand goods, the on purchase of which there was no ITC. That is 32.5. 32.6, 32.6 is vouchers. Value of supply in case of vouchers. Okay. And then 32.7, when between some distinct persons some specified services are provided, the value of supply is nil. Then 33, pure agent. 34, what is to be taken as rate of exchange in case of import and export of goods and services. So when we talk about import export of goods, then the rate of exchange is as per Customs Act, and when we talk about import export of services, it is as per generally accepted accounting principles. And 35, if value given is including GST, then how to calculate assessable value? So in short, if 1,18,000 is the value given including GST at 18%, then 1,18,000 into 100 divided by 118. Okay, that is value including GST multiplied by 100 divided by 100 plus rate of GST. That is the formula which is given by rule 35. Okay, now going to ITC. ITC section 16, eligibility and conditions. Who is eligible to claim ITC? Registered person with respect to any goods or services or both which are used or intended to be used in the course or furtherance of business. That ITC which he avails gets credited in e-credit ledger. And then 16.2 talks about conditions for claiming ITC. 16.3 says that if you take depreciation on the GST element of capital goods, then you can't claim ITC of that GST. And 16.4 talks about last date of claiming ITC, which is 30th November following the end of the financial year to which the invoice pertains, or actual date of filing of annual return under GST, whichever is earlier. Then friends, 17 is ITC apportionment and blocked credits. In short, those goods or services on which ITC is not available is given in 17.5, blocked credits. 18, ITC in special circumstances. We will discuss now. Few sums of 18, you will understand what exactly we are talking about. Okay, 19 ITC in case of job work and 20 ITC in case of input service distributor. So let's start with today's session, the formally sums solving. See, I am on page number 61. I am on page number 61. Alpha Manufacturing Private Limited engaged in manufacture of taxable goods is to compute its ITC. You have to compute its ITC from the following particulars. Now inputs A. Okay, one invoice on which GST payable is 12,000 is missing. Friends, one invoice is missing. If one invoice is missing, then of course you cannot take ITC on that of that 12,000. So how much ITC you can take in this case is 1,08,000. Inputs B, supplies to be received in 2 installments. Do you remember where inputs are received in lots or in installments? Then ITC can be availed only on receipt of last lot or installment. So here you can't take ITC at all. This is given in proviso to section 16(2). And he should be in possession of invoice was first condition of section 16. That's why of this 12,000 you couldn't claim ITC, and you cannot claim at all in the month of November for this 60,000. Then when I talk about CG is capitalized at full value, full invoice value, inclusive of GST. So of that GST you can't claim ITC because you have taken depreciation of Income Tax Act on the GST element also. So 16(3) doesn't allow you to take ITC. Okay, mind you, students here get confused. So is it the point that I can't claim depreciation on CG? That means if I claim depreciation on CG, then can't I claim ITC? So it's not like that. You can claim depreciation on capital goods and you have to claim, no problem, but don't claim on the GST element. Okay, don't claim on the GST element. Example, if asset is of 10 lakh and GST on that is 180, total asset price including GST is 1180. Claim depreciation on 10 lakhs. No one is stopping you. Don't claim on 1180. Claim depreciation on 10 lakhs and take ITC of 1,80,000. Okay, no one is stopping you. But if you claim depreciation on 1180, then you can't take ITC of 180. And that's exactly what has happened in this case. You have capitalized at full value this capital goods including GST and you have taken depreciation on full value. Hence, you are not being allowed ITC. Then, input services. One invoice dated 15th Feb of last year with GST payable of 55,000 is received in November. We are right now sitting here in the sum in the month of November. And from this 2,50,000 of GST, one of the invoice was of last year on which GST was 55,000. So my question is very simple to you. What was the last date of claiming ITC? The last date of claiming ITC was 30th November or actual date of filing of annual return, whichever is earlier, but it is said that annual return of the previous year was filed on 30th September. So friends, post 30th September, you can't claim ITC then. So 55,000, you can't claim ITC. So you can claim only of 1,95,000. So take total of 1,95,000 and 1,08,000. What is it? Are you getting 3,03,000? Check. 3,03,000 should be your final answer. With me, all of you? See this. See this. 3,03,000. Okay. Let us go ahead now. Comfortable, all of you? Many questions are there of ITC. Maybe today we will be only able to do few of them. Tomorrow balance sums. See. Next question. A registered supplier of taxable goods supplied merchandise valued at 3,50,000 including GST of 17,500 CGST and 17,500 SGST to Delta Industries Limited under forward charge on 20 September, issuing tax invoice on the same date. The goods were received by Delta Industries on 20 September and it claimed ITC of 35,000 on 23rd September. So friends, Our Delta Industries is recipient of supply. So recipient of supply has availed ITC of 35,000 rupees. Okay. But Delta Industries Limited means this recipient of supply failed to make payment. It failed to make payment towards the supply, including the applicable tax to the supplier within stipulated time. So can you tell me what is the time limit for making payment by recipient of supply to the supplier? So this time limit is 180 days from the date of invoice. Who tells you so? The second proviso, friends, second proviso of section 16(2) says that recipient of supply should make payment of value plus GST on it to the supplier within 180 days from the date of invoice. If he fails to do so, then whatever ITC he has availed, that much amount he will pay back. That much amount he will add to the output tax along with applicable interest. Okay. So discuss the ITC provisions applicable to Delta Industries Limited. If Delta Industries Limited makes a part payment of 2,50,000 to supplier on 23rd September next year. So basically, right now, when 180 days are over, 35,000, that is 17,500 each, will be added to the output tax. That will be the first consequence. Second consequence, if subsequently payment is made by Delta Industries, that is recipient of supply, to supplier, then it can again avail ITC. Let's see. But point is, only 2,50,000 payment is done. So ITC also can be availed only on proportionate basis. See, it's like this. If entire 350 was paid, then it could have availed ITC of 35,000, but paid is only 2,50,000. So ITC will be availed of how much? So do the cross multiplication, you will get it 25,000 rupees. So whatever we have done here is as per second proviso of CGST, second proviso to section 16(2) of CGST Act and third proviso. Clear? Let us see now step by step. So see, payment of value of goods along with applicable tax to the supplier is actually not a precondition at the time of availing ITC. So there was no such condition at time of availing ITC. But what the proviso said? Proviso said that recipient of supply must make such payment within 180 days from the date of issue of tax invoice. Okay, as we discussed, second proviso to section 16(2) of CGST Act. If Delta Industries means recipient of supply fails to make payment within this stipulated period, ITC of 35,000 will be added back to the output tax along with applicable interest at 18% per annum, which will be calculated from the date of utilization of credit till the date on which it is added to the output tax liability and discharged. Further, okay, if the supplier is not paid at all, the general penalty also would apply. That's fine. Delta Industries Limited makes a part payment of 2,50,000 after expiry of 180 days. Now it can proportionately claim ITC to the extent of paid consideration. So this is given in section, as we discussed, third proviso to section 16(2). Okay, let's go ahead. Let's go to the third question. Autosphere Private Limited is an authorized dealer engaged in sale of premium vehicles. So what's your business? Your business is selling some vehicles of international automobile brand. In addition, company also provides repair and maintenance services for both the vehicles it sells and for other brands. Understood your business model? It seeks your advice, means this um, Autosphere Private Limited, it is seeking your advice regarding eligibility of ITC on the following business expense incurred during its operations. 1. Can it claim ITC of vehicles purchased from manufacturer for the purpose of resale? So of course yes. Actually, as per 17(5)(a), you cannot claim ITC of motor vehicles, okay, which is used in transportation of passengers, approved sitting capacity not exceeding 13 including driver. You can't claim ITC, but there are exceptions. In that exception, what is one of the important exception? If you are using such motor car for further supply, then its ITC can be availed. So please go ahead and avail it. Vehicles purchased from manufacturer for purpose of resale, of course, you can avail the ITC. But two such vehicles were destroyed. Friends, two such vehicles were destroyed in accidents, okay, while being taken for test drives by potential buyers. On this, ITC cannot be claimed because as per 17(5)(h), ITC is blocked in case of those goods which are lost, damaged, destroyed, written off. So no ITC on those two vehicles. Then what about works contract services which are availed for construction of dedicated car washing shed within business premises? No ITC. Why no ITC? Or ITC will be blocked. Why? 17(5)(c). ITC is blocked in case of any works contract services which are used for construction of an immovable property. Clear? So no ITC on this case. And you know that 17(5)(d) talks about blocking in case of goods or services which are used in construction of an immovable property. So see, first, vehicles purchased for resale, okay, it falls in exception to the block credit. So ITC on vehicles purchased from manufacturer for purpose of further supply is allowed. But ITC on vehicles destroyed during the test drives will not be allowed because of 17(5)(h). And work contract services for constructing a car watershed, ITC will not be allowed as per 17(5)(c) because it is blocked with respect to works contract services used in construction of immovable property. Make sense? Let's see. Let's go ahead. Next, with reference to provisions of section 17, examine availability of ITC in following independent scenarios. Nova Autotech Limited, leading automobile manufacturer has availed works contract services for construction of foundation meant for permanently mounting a machine. Yes. So even if ITC is not allowed in case of works contract used in construction of an immovable property, but it is said in bracket other than plant and machine. Means if it is for plant and machine, then ITC will be allowed. So here ITC will be allowed. Urban Core Projects Private Limited procured cement, paints, iron rods. Okay, means goods. These are goods. And engaged architects, services, interior designers, services, but for construction of commercial complex. So till now, I am getting a what you can say feel that no ITC, but it is on behalf of a client under contractual agreement. So this is not for own business. It is on behalf of client. So ITC will be allowed. Then Glidewell Industries availed maintenance and repair service from Speed Torque Motors for a truck used for transporting finished goods. ITC will be allowed. ITC is blocked for repairs and maintenance with respect to motor vehicles used for transportation of passengers, approved seating capacity not exceeding 13 including driver. But this vehicle means this is a truck. This is not goods transportation. This is this is not for passenger transportation. It is for goods transportation. So ITC will be allowed. So see friends, ITC is available in respect of works contract services availed for construction of foundation of machine since it is used in the installation of plant and machine. So it is not blocked under that 17(5)(c). Then Urban Core Projects Private Limited, the goods and service have been used for construction of immovable property but for a client, that is not on its own account. So ITC is allowable. Okay, as 17(5)(d) restriction applies only to construction on own account and not when it is for others. Okay, then friends, ITC on maintenance and repair service for a truck, maintenance and repair service for a truck used for transportation of finished goods, ITC will be allowed as the vehicle is used in the course of business and is not covered under the block credits. Not covered under block credits because you know covered under block credits is only used for the one which is used in transportation of passengers. Okay, let's go ahead. Thank you so much for liking the session. Okay. Now friends, next one, you have to advise on availability of ITC in the following independent scenarios. Trans Age Industries Limited purchased a minibus. It purchased a minibus with sitting capacity of 16 persons. ITC will be available. Why it will be available? Because sitting capacity is exceeding 13. So yes, ITC will be available. Ceramax Tiles Private Limited manufacturing enterprise acquired 2 heavy-duty trucks for transportation of its finished goods. So of course, ITC will be available. Okay. Then Autovogue Motors, a luxury automobile dealership based in Vasant Vihar, purchased 5 premium sedans intended for onward sale to customers. So ITC will be allowed because motor vehicles are purchased for further supply. Then Orion Freight Movers Private Limited availed outdoor catering service. So you know usually ITC is blocked on outdoor catering service. But if such service is used to be given to the employees, okay, which is as an obligation under any law, then ITC will be allowed. So it is to operate a factory canteen, which is mandatorily required under the Factories Act. Here, ITC will be allowed because it is mandatorily required to operate such canteen under the Factories Act, and the outdoor catering service is taken for that particular canteen. So see, ITC allowed first case in case of minibus. All of you minibus? Yes. Then motor vehicle used for transportation of goods, ITC will be allowed, and Autovogue Motors is engaged in business of selling of cars itself. So ITC will be allowed. And on outdoor catering services, it will be blocked. Okay, it will be blocked means usually it will be blocked, but yes, in our case it will be allowed. Why? Because in our case it is taken for the canteen which is run as per Factories Act, so it will be allowed. Friends, clear? Shall we go ahead? Just taking your attention bit of the ITC topic, and next taking it a bit to credit note topic, section 34. Next question is of credit notes. Zenith Stationery registered supplier made following supplies to its customers, Mr. Karan, during the quarter ending 30 June. So what it sold? It's given on 4th April, 12th May, 21st May, 3rd June, and value including GST is given, and invoice has been issued. See, this invoice numbers are given. Goods mentioned in invoice 1102 means this invoice, 1230 means this invoice, and 1254 means this invoice were returned by Karan. Okay, they were returned by Karan. So you know, if there is a goods return, then which document as a supplier you will give? So you will give credit note. So question is whether this supplier Zenith Stationery can issue consolidated credit note. So answer is it to one single seller? Sorry, one single buyer? Yes. Zenith Stationery made following supplies to its customers, Mr. Karan. So it is to particular single buyer. So yes, single credit note can be issued. There is a provision in section 34 allowing consolidated credit note or debit note. So registered supplier is permitted to issue one credit note, one or more credit notes, means one is also okay, to recipient in respect of supplies made in financial year, provided the credit note contain prescribed particulars. Therefore, supplier may issue consolidated credit note for multiple invoices. Absolutely no problem. Okay, in the same financial year without requirement to link each credit note individually to specific invoice. Accordingly, Zenith Stationery Private Limited can issue consolidated credit note against these multiple invoices. Okay, so why this is in the ITC? Because when you issue credit note, then your output tax will go down. Okay. Now, are you ready for seventh question? Yes, those who are watching live. Question in this seventh is compute net GST payable. Now, net GST payable, whenever such question is asked, means you have to think about output tax, means GST on outward supply minus you have to think about ITC. You will get net GST payable. So let's try and understand what will be the output tax in this case. Messrs. Buildpro Infra Solutions registered supplier supplies following goods and services for construction of buildings and infra projects. First, excavators for required period at per hour rate. So they are giving excavators, these machines, these equipments, they are letting out. So this is a service of letting out of excavators. Manpower for operation of excavators. Manpower for operation of excavators is also a service, and soil testing and seismic evaluation at per sample rate. Excavators are invariably hired, means compulsorily excavators are hired along with operators, means you don't give only excavators. Along with excavators, you give skilled manpower for operating them. Similarly, excavator operators are supplied only when excavator is hired out. Means you never only give supply of manpower services. You give excavator, that is that machine, plus manpower service together. This is given together only. Okay. Build Pro receives following services. Now receives following services. This information is given for ITC purpose. Let's see now. There is a annual maintenance service for excavators. Of course, you can claim ITC of this. Health insurance for operators of excavators. Usually no ITC because it is blocked as per 17 funds life insurance. Unless it is mandatory by way of law to provide these services. Then scientific and technical consultancy for soil testing, of course, you can claim ITC. For a given month, the receipts, thank you sir for such type of, thank you so much Soumyadeep ji. God bless you. Thank you so much Chinu ji. I hope both of you are watching the session well. So keep on watching, keep on subscribing, and keep on liking the video, and keep the consistency. I'm with you always, always with you. Okay. If you are competent enough, if you are willing enough to study, yes, you will find faculties. Okay. See, for a given month, the receipts of Buildpro Infra Solutions Private Limited are as follows. Oh, my pleasure. My pleasure, Chinu. Really, you are making my day. Thank you so much. So basically, once I start teaching, I go in a different zone. That itself is a magic for me. And if I know that it is helping students, then to my happiness is next level. Thank you so much. It should add value in your life. That is the whole intention. See, higher charges for excavators is 21 lakhs. Services charges for supply of manpower for operation of excavator is 30,000. But this 21 lakh and 30,000 can't be done separately, because excavators are compulsorily supplied with manpower, with operators of excavators. Okay. And never ever operators of excavators are those services are never given individually. So these both services are connected with each other. So actually 21 lakh 30,000 is the total. 21 lakh 30,000 is the total of these services. What is the GST on that? Find out. Now this is a mix. This is composite supply, in which principal supply is of hiring of excavators. So see, hiring out of excavators, GST is 12%. Supply of manpower, actually it is 18%, but here neglect that 18% because principal supply is hiring out of excavators. So on 21 lakh 30,000, calculate at 12%. And then service charges for soil testing and seismic evaluation at all three sites. This is a different service. On that, GST is at 18%. See, soil testing and seismic evaluation. So 2,75,000 into 18%. If you want, we can calculate also. First of all, 21 lakh 30,000 into 12%, 2,55,600. And in next case, 2,75,000 into 18%, 49,500. These are your output tax. GST paid during the month on services received is as follows. Annual maintenance for excavators, yes, take ITC. Health insurance for excavator operators. Friends, it is nowhere said that it was mandatory to give such service. Means it was mandatory to give health insurance to the employees as per any law. It is nowhere said that. So this ITC will not be allowed. And of course, scientific and technical consultancy for soil testing, this will be allowed. So total allowed is 1,10,000 plus 1,25,000, that is 2,35,000 will be total ITC allowed. Now total output tax is 255,600 plus 49,500. Total output tax is 3,05,100. From that you minus 2,35,000. You will get 70,100. They have not asked us bifurcation between CGST, SGST, IGST. So final answer is 70,100. See this. Clear? So see, first we did ITC computation available for set off, annual maintenance services for excavators. You took the ITC. It's okay even if you don't do this column. That's okay. Then health insurance blocked as per 17.5b. So no ITC. Then scientific and technical consultancy, you took ITC. So total is 235. Now you are supposed to calculate GST liability on outward supplies. So hiring charges of excavators and supply of manpower, on both of them together you calculated at 12% itself, because it is composite hiring, composite supply, supply of manpower, where principle is of hiring. Okay, then soil testing and seismic evaluation you took at 18%. You took the total 3,05,100, and then you computed net GST payable, which is output tax minus input tax credit. So you got net GST payable. Make sense? Yes, absolutely. Let's go ahead. Let's do questions to the extent possible. It's already been 45 minutes of this session, and I hope you're getting, hang of this topic? You are getting this topic? Let's see. Next question. Kunal Mehra question. He is a registered supplier engaged in trading of industrial chemicals. He pays GST under regular scheme. Friends, regular scheme means section 9 and is not eligible for any threshold exemption. Fine. What you have to do, you have to compute net CGST, SGST, IGST payable in cash for the month of September. Payable in cash means output tax minus input tax credit. Okay, net GST payable you have to calculate. Let's see for the month of September. So you will need output tax first. See, he has made following outward taxable supplies. Intrastate supplies of 30 lakhs. Now friends, CGST is 9%, SGST is 9%, IGST is 18%. All amounts of inward and outward supply exclusive of taxes and conditions necessary for availing ITC are fulfilled, except those specifically mentioned above. Okay, let's see. Now, on intrastate supply of 30 lakh, calculate 9% each. So isn't it 2,70,000 CGST, 2,70,000 SGST? Then interstate supply is of, yes, absolutely so many. Interstate supply 6 lakh into 18%. Because I told you that many things coincide at CA Inter and CA Final. So IGST is 1,08,000. So you got CGST, you got SGST, you got IGST. Now he also made following inward supplies, means purchases. So intrastate purchase from registered person is of 2,50,000. So friends, 2,50,000 into the GST, which is at 9% each. Calculate now. 2,50,000 into 9%. 22,500 will be CGST and 22,500 will be SGST. Intrastate purchase from unregistered dealer, there will be no ITC in this case. And interstate purchase from registered dealer, so on the 16 lakh, calculate at 18%. So it is 2,88,000. Okay, so 1,10,000 plus 22,500, 1,32,500, 75,000. Acha, but some additional information is also given, friends. So maybe my ITC will be affected because of that. So I should check additional information also. On 15 September, Mr. Mehra purchased an intrastate vehicle for business use at total price of 7,20,000, in which CGST is 40,000, SGST is 40,000. Oh, now intrastate, the vehicle was capitalized at full value, including GST on the same date to claim depreciation. Anyways, you know, on vehicle you get no ITC. So there's no point reading this particular thing. You are not going to get ITC. Okay. Out of interstate purchase from registered dealers, this will matter to us. Out of interstate purchase from registered dealers, goods worth 1,20,000 were received on 3rd October. So friends, you are trying to calculate ITC for the month of September. So in September, you will not get ITC for goods of 120 because you have received them in October. So do one thing, interstate purchase was of 16 lakh na. From 16 lakh, you minus 1 lakh 20,000. You can get ITC on 14 lakh 80,000 only. On 14 lakh 80,000, calculate at 18%. Are you getting 2 lakh 66,400? So, yes, 1 lakh 10,000 plus 22, 500, 132, 500, 75,000 plus 22, 500, 97, 500, and 65,000 plus 266, 400, 3 lakh 31,400. Are you getting these ITCs? CGST 132, 500, SGST 97, 500, and IGST 331, 400. Check and tell me, are you getting these figures? Then we will go ahead and do net GST liability calculation. Okay, so see, 331, 400, 132, 500, 97, 500. This is your ITC. Okay, and your output tax is check. So see, 132, 500, 97, 500, 331, 400. Your output tax is 2,70,000, 2,70,000, and IGST 1,08,000. So are you ready for solving this now? Now, how to solve this? I'm just going to take you through formal solving of this. Okay, so yes, we have opened one notebook also in the batch. So that notebook also on the last day I will send it to you. You please follow the description of this video, and you know you're not getting this video by chance. You are dedicated students, so you're getting this video. And please understand that don't follow only one session. This is the session number. I think today's session number what? We started from 4th of December. So 4th, 5th, 6th, 7th, 8th, 9th. Today's 6th session. So follow earlier 5 sessions also. And keep on following till 17th December. Okay, all the relevant topics for you. Keep on following. Means of course, if you are at CA final, all topics are relevant for you. Now here, this is our question number 8, isn't it? This is our question number 8. Page number 64. Page number 64. Computation of net GST payable for the month of September, whatever September it is, for the month of September, which all output GSTs are payable. So particulars CGST, SGST, IGST, all figures in rupees. With me all of you. A point, output tax. Now output tax we have to calculate like this. How we have to calculate output tax on intra-state supply. Find out your intra-state supply. Your intra-state supply are 30 lakhs. So 30 lakhs into 9% each. So isn't it 2,70,000? 2,70,000 and dash. Then comes on interstate supply. What is the interstate supply? Interstate supply is worth 6 lakh. So friends, 6 lakh into 18%, that will be 1,08,000. So here I get therefore total output tax. So I am sure that if you are doing it in the exam systematically, then you should do the lines also. 2,70,000, 2,70,000, 1,08,000. Now friends, go ahead, B point, less input tax credit. Okay, when you are doing less input tax credit, then first you will use ITC of IGST. So ITC, IGST to pay output tax of IGST. Okay, you have to use ITC of IGST first to pay output tax of IGST. You know your ITC of IGST is 3,31,400. So entire 1,08,000 I am first using to pay output tax of IGST. But balance is also there. What is the balance? So balance ITC of IGST. What is the balance ITC of IGST? 331,400 less 1,08,000, that is rupees 2,23,400 used to pay output tax of CGST and SGST. All of you know we can use it in any order or any proportion. Now you just observe your ITC of CGST is 1,32,500 and your output tax is 2,70,000. Okay. So I think you have sufficient. Okay, and your ITC of SGST is 97,500. Okay, so you will use in such a way that overall GST payable in cash will be minimum, isn't it? So for 1 second, let us do the analysis. So take your calci. This is just for analysis I am writing. Huh? Only for analysis I am writing, just for rough working. This I have 132,500 ITC and this I have 97,500 as ITC. So 270 minus 132,500. I am going to lack 1,37,500. I am going to lack 137,500 in my CGST. And how much I am going to lack in my so 137,500 I will lack in CGST. How much will I lack in my SGST? I will lack in my SGST 172,500. So I am going to totally lack 137,500 and 172,500. I am totally going to lack 3,10,000. But I have ITC of IGST of 2,23,400. Even if I use it equally, I think there shouldn't be any problem because there's a huge lag. So, anyways, I know I will have to pay something in cash. Okay, so okay, used equally, assumed, because you could have used in any order and any proportion. So what you do, 2,23,400 divided by 2. So what is it is 1,11,700. 1,11,700. Now friends, tell me what is balance GST payable. What is balance GST payable? So isn't it 2,70,000 minus 1,11,700? 1,58,300 of CGST and same 1,58,300 of SGST, nothing of IGST. Now ITC of IGST is over. Now less ITC of CGST. Of course, to pay output tax of CGST, it is 132,500, and here not applicable, and here dash, and then less ITC of SGST to pay output tax of SGST, which is 97,500. So now tell me what is your net GST payable. So therefore, our net GST payable is going to be 158,300 minus 132,500, which is 25,800 of CGST, and 158,300 minus 97,500, 60,800 of what? 60,800 of SGST and dash in case of IGST. Is it clear to all of you? So I am going to come to the notes also. What note you should write here? I am going to come to that also. Okay, so you forget this working here. Forget this working. Okay. Now, what note I am going to come to, please understand that note properly. You should write such note in the exam. Whenever there is a question, and there will be question of utilization of ITC, isn't it? Okay, fantastic. So what note you have to write now? Please pay attention. So only once writing the note in this batch. As per section 49(5) of CGST Act 2017, 49A, 49B and Rule 88A of CGST rules, input tax credit of IGST that is ITC of IGST, shall be first utilized shall be first utilized to pay output tax shall be first utilized to pay output tax of IGST, and balance if any and balance if any shall be utilized to pay output tax of CGST and SGST in any order in any order and any proportion, in any order and any proportion. Do you agree with me on this? Yes. Now understand, in given case we have used remaining ITC of IGST equally to pay CGST and SGST. Agreed? Then next note will be like further ITC of CGST is used to pay output tax of CGST. Okay. Then moreover ITC of SGST is used to pay output tax of SGST. Okay, it should be noted that ITC of CGST cannot be used to pay output tax of SGST, and ITC of SGST cannot be used to pay output tax of CGST. Did you get it? Yes, sir. So this way a detailed note should be there. So I just thought that since it is sure that utilizations question is going to be asked in the exam, I will do it once, the detailed note. So now may I go to ninth question? Stellar Components Private Limited, registered manufacturer engaged in taxable supply of industrial goods, made following purchases during the month of Jan. The details are as follows. And what you want to do, you have to determine ITC available for the month of Jan by giving necessary explanation for treatment of various items. Okay, you may assume necessary conditions for availing ITC have been complied with by this entity. So capital goods on which depreciation has been claimed on full value including GST as per 16.3, no ITC. Goods purchased from Dharam distributors, invoices received in Jan, we are finding for the month of Jan, but goods are received in March, no ITC in Jan as per 16.2 B he should be in possession of goods or services in order to avail ITC. Car purchased for resale, very good, but destroyed during the test drive. As we have seen, 17.5H, goods damaged, destroyed, lost, stolen, written off, and disposed of by way of free samples, gifts, no ITC. Goods used for setting up telecommunication tower, ITC will be allowed. Okay, but it is for telecommunication tower. It is for immovable property. Think again about this. It is for immovable property. For telecommunication tower. So it is 17.5D. Goods purchased from Vedica Enterprises, full payment made. So we made full payment to Vedica Enterprises, but supplier has not deposited the tax. So condition of section 16 subsection 2 clause C, that the tax should have been paid, deposited to the government, is not getting satisfied. No ITC. Truck purchased, yes, congratulations on truck, so you can take ITC. 17.5A does not apply. Okay, let's see. We'll do that and then we will go ahead to next question. Are you comfortable? Nimi, Chinu, Somirip? Okay. Yes. So basically, since it is plant and machine, for the Vedika, capital goods, so you cannot claim. Vedic also you cannot claim, friends. Only truck you can claim. Only 96,000 is the answer. Sure. Let's go ahead. Only 96,000 is the answer. This also you cannot claim. 17.5D, immovable property, is given specifically that on telecommunication towers you cannot claim. Then in next question also you have to determine ITC available and even output tax liability. Both separately you can calculate. No need to, they have not asked you net GST payable. Calculate ITC and calculate output tax liability. Nova Build Tech Private Limited, a manufacturer of roofing panels, has total ITC of 195 as on 1/7. So can I say this is opening? This is opening ITC 195. Company provides following additional information for the month of July. Input tax on raw material in July is 48,000. But the raw material are used for both taxable and exempt activities. So you can't claim full ITC here. It is used for both taxable and exempt activities. Getting it now? You can't claim, here apportionment will happen. Apportionment of ITC will happen. Input tax on account of horizon caterers in connection with company's housewarming event, no ITC. On catering, ITC is blocked. Even if that catering is used in course of furtherance of business, ITC is blocked. Input tax on inputs used in exempt supplies worth 2,50,000 during July, but it is for exempt supplies, so ITC will not be allowed. Total GST paid on cosmetic and plastic surgery of company CEO, no ITC, friends. As per 17.5B, ITC is blocked. in case of cosmetic and plastic surgery. Total turnover is 72 lakhs, and which is interstate, which is taxable at 18%. But friends, they have told you that input tax on inputs used in exempt supplies worth 2,50,000. So I can see that my exempt supplies are 2,50,000 and my taxable supplies will be 69,50,000 because my overall turnover is 72 lakhs. That's what I have understood. Acha, acha. So only like interpreting the facts is the main issue in this question. See, so actually 72 lakhs, that's what interpreting facts I said. So its interpretation is like this, that 72 lakhs is the supply of taxable supply itself. So on 72 lakhs, calculating at 18% IGST, 12 lakh 96,000. Okay. So 72 lakhs is separate. 72 lakhs is separate and plus 2.5 lakh exempt is separate. So your total turnover is 74.5 lakhs. Okay. Now output tax on attributable to common credit means what? There is a 48,000 rupees of commonly used inputs. There is 48,000 rupees of commonly used inputs. Can you see that? That 48,000 of commonly used inputs, can I say they are used for outward supply of 74.5 lakhs? So 48,000 of ITC is for entire 74.5 lakh. So for 2.5 lakh, which is exempt, it will be how much? So 48,000 into 2.5 lakhs upon 74.5 lakhs. 48,000 into 2.5 divided by 74.5. We are getting 1611. So friends, you will make this 1611 payable. So give back government credit of 1611. Why? Because then you can take entire credit of 48,000. So see, once you give back this 1611, your overall output tax payable will become 12,97,611. Now from that you subtract opening balance of ITC as well as entire ITC for the month. Let it be on the common inputs. Now you can subtract entire 48,000 because you have made this 1611 payable. Clear? All of you? Yes or no? Nimi, is it clear to you? Is it clear, Saumyadeep, Chinu, and rest of you watching the session live, as well as those who are watching recorded version of this? So whatever was common on the proportionate to common, like 48,000, check na, which 48,000? Where are we? Sorry, this here. This 48,000 was used for both taxable and exempt. So 48,000 was used for 74.5 lakhs, but we don't deserve ITC on supplies worth 2.5 lakhs. So that's what we calculated. 48,000 into 2.5 divided by 74.5. 1611 we don't deserve. So we are making it payable. 1611 we are making payable, and then only we are taking entire ITC of 48,000. So it is as good as taking ITC of 48,000 minus 1611. Effectively, you are taking ITC of 46,389. Okay, so this way we have to go ahead. Now I have to do with you some questions So I focused right now on 16, then I focused on 17.5. To some extent, I have focused on apportionment. 17, to apportionment you have seen just now. That is, inputs are used commonly for outward supply, which is taxable as well as exempt. Of course, I am going to come back to 17, but before that, I am going to focus also on 18. This 14th question, I am going to give you as homework, compulsory homework. It is similar to, this question is similar to one of the question which we have done today. That we did know that question of excavators, question 7. So 14th is similar to question number 7. So this is compulsory homework. Will you all try this, friends? But only thing is, I'll give you a hint. Inward supplies GST paid. So basically, it's similar to question 7 plus some concepts of 17.5 blocked credits. See, inward supplies GST paid is given on, health insurance. You cannot take ITC. Raw material for which invoice has been received and GST has been paid on full amount, but only 50% of the material has been received, remaining to be received in next month. You cannot claim ITC because goods are received in lots of installments. Works contract service used for installation of plant and machine you can take. Purchase of manufacturing equipment directly sent to job worker. This also you can take ITC. No problem. Section 19 allows you to take ITC of capital goods or inputs which are directly sent to job worker. No problem. Purchase of car, you cannot take ITC. Outdoor catering, you cannot take ITC. So basically, ITC that you can take is 15,000 plus 58,000. That is 73,000. 73,000 of ITC you can take. Comfortable? Yes. Dynatic Systems also provides machine rental services along with manpower for machine operation. That's why I'm saying similar question. As per industry practice, machines are always hired with operators, and operators are supplied only when machines are hired. Okay. Now receipts from outward supply is given. Hiring receipts and service charges for supply of non-power machine operators. Okay. Then all supplies are interstate and applicable IGST are. Acha, sale of machine is also there. Sale of machine. So we have not sold the machines. Hiring of machine will apply 12%. And opening balance of ITC was nil. So calculate on both of this. Just run through the solution for you. See, as we discussed, so one of them, was it given that the statutory under Factories Act, health insurance? Just go and find out whether it's given in the question like that. Did we miss out? Dynatic Systems based in Pune, registered manufacturer, supplies and supplier of industrial machine. Okay. Health insurance, read properly. Health insurance of factory workers as required under Factories Act. Can you see? So please, good that we did this question. as required under Factories Act. Do you appreciate this point? So it was mandatory to provide such insurance to the employees. So yes, ITC will not be 73,000, it will be 97,000. You will get ITC of that also. So 97,000. Make sense? So in our hurry, we did not read that it was statutory under Factories Act. So yes, 97 is absolutely correct. Now, output tax on entire 640 plus 290, you will calculate at 12%. Why? Because you know that it is invariable to give operators along with the machine. So principal supplies of hiring of machine, and on hiring of machine, the rate of GST is 12%. That's why you apply 12% on the entire and then take ITC. You will get net GST payable. So we have solved it. No need of homework now. We have solved it. Okay. Then friends, what we are going to do now? 16th question. Are you with me on 16th? Zyprus Trading Company. Yes, it's already 1.5 hour. For more about half hour, we'll continue. Is that fine? At least till 9:30, so that we can do few more questions. Zyprus Trading Company, registered supplier of goods located at Kerala, who pays GST under regular scheme, has made following transactions exclusive of tax during the month of May. Details of purchase and sales is given. Okay, the registered person, that is the supplier, is in Kerala. Accordingly, evaluate the transactions. What you have to do, minimum C, S and I GST payable in cash means output tax minus input tax credit. Mind you, mind you, input tax credit and other balances are given. This interest and penalty balance is in e-cash ledger. It is in e-cash ledger. Okay. Now, you have got ITC balances of 60,000, 36,000 and 1,20,000. So simply while doing net minimum GST payable in cash, we will do output tax minus input tax credit. We will neglect this. Okay. Now see, purchase GST percentages are given. Yes, they are given here itself. Purchase of 6 lakh. Calculate IGST at 18%. 6 lakh into 18%. 1,08,000. And purchases in Kochi. Total to forget it. No need. Purchase in Kochi. So 3,20,000 into 9%. So isn't it 28,800? 28,800. Take total. So 60,000 plus 1,08,000. I am getting 1,68,000 of CGST. SGST I am getting 36,000 plus 28,800. 64,800. And I am getting IGST of 1,20,000 plus 28,800. 1,48,800. These are my ITCs. And then go ahead, calculate output tax on 12 lakh at 18%, 2,16,000 on 9,50,000 at 9% each, 85,500, 85,500. Make sense? So far, so good. Did you understand the ITCs and the output tax? If yes, then I'll go through solution and then we will solve also. So see, this is your question number 16, right? Yes. Okay. 1,08,000 is fine. Opening balance was of IGST 1,20,000. Okay, 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 okay. I have written in incorrect column. That's what whole point is. In place of, sorry, in the while writing the solution there, in place of IGST for the month was 1,08,000. So I should have written 1,08,000 plus 1,20,000. So yes, 2,28,000 is ITC of IGST. ITC of C was 28,800 for the month. So 28,800 plus opening 60. So 88,800. And SGST opening was 36. 36 plus, yes, 28,800. 64,800. These are the ITCs, friends. These are the ITCs. Now, output tax will be, as we discussed, output tax will be 2,16,000 IGST, 85,500 CGST and SGST. Now, do you agree that 2,28,000 is your what? 2,28,000 is your ITC available of IGST. You know ITC of IGST will be first utilized to pay output tax of IGST. Yes. So you are fully fully utilized against IGST liability. But after that also something is remaining. 12,000 rupees of ITC of IGST is remaining. Where will you use this 12,000? Either to pay C or to pay S or in any order and any proportion. So if you observe, the output tax of CGST is 85,500, but its ITC is 88,800. So you have sufficient ITC of CGST to pay output tax of CGST. So you will avoid using for that. Let's see SGST. SGST's output tax is 85,500, but its ITC is 64,800. So yes, we are lacking there. We are lacking in the SGST. So remaining ITC of IGST of entire 12,000 you will pay against, you will use against SGST, and then accordingly calculate the net GST payable. And as we discussed, interest and penalty are not available as credit. Okay. So friends, I would like to solve it for you in the notebook and show you, because minimum net GST payable calculation of that is requiring some analysis. So this is our question number 16 on page 69. Question 16 on page 69. And I'm just going to show you computation of minimum GST payable, means net GST payable in bracket minimum. Computation of net GST payable, that is minimum. Figures in rupees. Particulars CGST, SGST and IGST. So first of all, write down what is the output tax. So A point, output tax. Now under output tax on intra-state supply, your intra-state supply is worth 9,50,000. So 9,50,000 into 9% each. So isn't it 85,500? So 85,500, 85,500 dash, and then on interstate supplies. So on interstate, it will be 12 lakh into 18%. So friends, 12 lakh into 18% will be 2,16,000 of IGST. So therefore, total output tax. What is the total output tax? Total output tax continues to be 85,500, 85,500 and 2,16,000 less ITC. Now less ITC, what do you have? You have of IGST to pay IGST. ITC of IGST to pay output tax of IGST. But, we know that ITC of IGST is how much? 2,28,000. So first using here 2,16,000 completely. Okay, now comes balance ITC of IGST. It is to pay. We are using it to pay SGST only in this case. In this case. Why? Why so? As ITC of CGST, can you see ITC of CGST? That ITC of CGST is ITC of CGST was 28,800 plus 60, 88,800. So just for your analysis, I am telling you, just for your analysis, 88,800 is the ITC of CGST. So it's very comfortable. And ITC of S is only 64,800. So here you are not comfortable. So as ITC of CGST is sufficient to pay what? To pay output tax of CGST. So we are helping those who need the help. SGST needs the help. So 12,000 will be used in SGST. That is the point. Then only net GST payable will be minimum. So how you got 12,000? 2,28,000 was balance of ITC of IGST minus 2,16,000. Okay, and then after that your balance GST payable will be how much? After that your balance GST payable will be 85 500. Still this is remaining 85 500. Here 73 500, because you already paid 12,000, and here nil. Now you will do less ITC of CGST. ITC of CGST was 88 800, but you have to use only 85 500. Congratulations. Can't use against SGST, no need to use against IGST. Then less ITC of SGST, not applicable here. Here SGST's ITC is 64 800. You will use it completely, 64 800. So now tell me, what is your net GST payable? Your net GST payable is 0, then 73 500 minus 64 800, that is 8700 and 0. But remember one thing, that there is a excess ITC to be carried forward. What is excess ITC to be carried forward? So it is of your CGST, because you had 88 800, but you have used only 85 500. So 88 800 minus 85 500, 3300 is excess ITC to be carried forward. Make sense? Yes, sir. So this way you can go ahead and do this question. And of course, that note and all you can manage. Fantastic. And go ahead, all of you with me. Fine. So we completed 16th question. Now, let's see. Now some questions will push for tomorrow. Tomorrow's date is 10th. And by the way, we are going to increase our number of sessions in a day. Sometimes in a day we are going to take 2 sessions. I'll tell you from when. Okay, so this next one also will push to tomorrow, 10-12. It is of 18-1B. So tomorrow also we continue with ITC only. Okay. Then here we can do this now. 24th. Let's do 24th now. Question is, compute net ITC available for the month of July with necessary explanation for your conclusion for each item. You may assume that all the other conditions necessary for availing ITC have been fulfilled. See, life insurance premium paid on life of factory employees, but it is as per company policy, not obligate, not mandatory. So no ITC. Raw material purchased, invoice is missing, but delivery challan is available. No ITC. It's necessary to have invoice. Raw material used exclusively for zero rated outward supply. ITC is available. Okay, because zero rated means exports. Whatever inward supplies you are using for making exports, ITC is available. Work contract service used for repair of factory, and this is debited to P&L. Congratulations. So it is not construction. If it is not construction, ITC is allowed. capital goods purchased for 4,20,000, depreciation has been taken on at 10% on claimed on full value of 466,200. No ITC because you are taking depreciation on GST part also. So as per 16.3, no ITC. So till now 55 and 32 you can claim ITC. Go ahead. In October month of last financial year, this Artec Industries availed ITC of 2,50,000 on raw material directly sent to job workers premises under Chalan. Yes. So it is possible. You can claim ITC. Even if you are sending some goods outside the factory to job worker, you can continue to claim ITC. Said raw material has not been received back by company up to 31st July of the current financial year. That is absolutely okay. Why? Because you have got 1 year. In 1 year, the input should be received back. And till now, 1 year is not yet over. This is given in section 19. So no effect for this. No effect for this. All the above input supplies have been used exclusively in manufacture of taxable goods. Assume all other conditions required to avail ITC have been fully complied. So 55 and 32, 87,000 is the final answer. This was our question number 24. Yeah, see this. 87,000 is the answer. Life insurance premium nil. Raw material purchase invoice missing nil. Zero rated supplies allowed. Works contract service debited to P&L allowed. This not allowed. So 87,000 is the answer. And this entity has sent raw material directly to job worker and has not received back of the current FI. Since 1 year period from date of dispatch has not lapsed, ITC is not required to be reversed. That's why no effect. Make sense? With me? Comfortable? Yes. So this is of 18.6. Pushing it to tomorrow. See this 26th. Right now, we can do 26th. See, it is for job worker. Devansh Engineering Works, registered person located in Indore, instruct supplier to send certain capital goods directly to Mahadev Tools and Fabrications job worker. Means see, here you have Devansh Engineering Works, who seems to be principal. There is a job worker whose name is Mahadev Tools. He is job worker. So now Devansh Engineering instruct supplier. There is a supplier here. Supplier is being asked to send goods directly to job worker. Is it okay? Yes, it's absolutely okay. This Devansh Engineering Works can take ITC of that. Even if capital goods are directly received by job worker, it doesn't matter. Okay, for carrying out specific operations on those goods. The goods were dispatched by supplier on 12/5 and were received by job worker on 18/5. This date matters because from this date, the goods should be returned to the principal. The goods should be sent to the principal within 3 years. Because it's capital goods, the time limit is 3 years. For inputs, the time limit is 1 year. Although And the date of dispatch is immaterial. Date of receiving by job worker is important. Although Mahadev Tools and Fabricators completed the job work, capital goods were not returned to their principal. Whether Devan's engineering work is eligible to retain the ITC? See, if for first 3 years, yes. If not received within 3 years, then ITC will have to be given back. What action is required to be taken under CGST Act by Devan's engineering works in such case? Also explain what would be answer if instead of capital goods, it was jigs and fixtures. So friends, for jigs and fixtures, there is no condition that principal should receive the goods. Means it's okay even if goods are not received back. So there is no time limit. I mean, for inputs it is 1 year, for capital goods 5 years, for jigs, dies, molds, refactory materials, it's okay even if goods are consumed at premises of job worker. It's not necessary that they should be received by principal back. So see, a 3 year time period is available to return the capital goods from the date of receipt by the job worker. In view of the above provision, Devan's engineer is eligible to retain ITC availed by it on the capital goods. If capital goods are not returned within 3 years, then it shall be deemed that such capital goods have been supplied by Devan's engineering works to Mahadev Tools and Fabricators. And Devan's engineering work at that time would be liable to pay tax along with applicable interest. On the other hand, no time limit for what? For return of molds, dies, jigs, fixtures or tools sent out to job worker as per section 19(7) of CGST Act. Therefore, if Mahadev Tools and Fabricator does not return jigs and fixtures, it shall not be treated as supply and no further action. Whatever ITC this principal has availed, it can continue to enjoy that ITC. Clear? So in short, to tell you the summary, for inputs, the section 19(1), 19(2), 19(3) apply and time limit is 1 year for goods to be returned back. For capital goods, 19(4), 5 and 6 apply, for which the time limit for the goods to return back is 3 years. For tools, jigs, dies, molds, for molds, dies, jigs, time limit is no time limit. Yeah. What happened? Okay, for molds, dies, jigs, fixtures, refactory materials, 19(7) is applicable, which says that no such time limit. No time limit. That way. So I hope it is absolutely clear to all of you. Next one is of 18(1)(a). So tomorrow we will go in depth of 18. I will explain you. 18(1)(c) is next. So putting 10 in front of that now. 18(6) again putting 10. Okay. So friends, I think 33rd we can complete. Zenith Tools, registered manufacturer, is engaged in supply of taxable goods. Company purchased following goods for the month of Feb. you please determine ITC available. Okay, giving suitable treatment or justification. CG, depreciation has been claimed on the full value including GST, no ITC. Goods purchase, invoice received in Feb, but goods received in May, no ITC in the month of Feb. We are calculating for Feb. Car purchased for further supply, but destroyed in the test drive, no ITC. Goods used for setting up telecommunication towers, that is immobile property, no ITC. Goods purchased from Reva traders, full payment is made, but they have deposited tax later, no ITC. Truck purchased for delivery of finished goods, yes, but we don't know the amount. Only on that one thing, ITC is possible to be taken. Was it 27th? No, it was question number 33. So in 33, see, everything is nil. Only on trucks purchased you can take, ITC is allowed. And don't take of that 12,000. Tax has not been paid. Don't take. Okay, then what else? Now see this one question, last one for today. Last one for today, which is question number 43. Are you there on question number 43? Messrs Autodrive Dealers Private Limited engaged in sale of passenger motor vehicles. Sitting capacity not exceeding 13. Undertake following transactions related to demo vehicles. Providing test drives to potential customers. There are 5 scenarios given. You have to tell me ITC eligibility on purchase of demo vehicles. Okay. Then you have to calculate GST liability on sale of demo vehicles. Okay. And explain legal framework governing availability of ITC and GST payable on sale of capitalized and non-capitalized demo vehicles, referencing CBIC circular number 231 by 25 by 2024. Let's see. Scenario A. In April 24, company purchased demo vehicle of 10 lakh, excluding GST, on which GST is 1,80,000. The vehicle is not capitalized in the books and is used exclusively for promoting sales of similar vehicles. So all of you know that if usually motor cars are purchased, the sitting capacity not exceeding 13 including driver, usually you don't get ITC. But if it is used in further supply of such vehicles, then ITC is available. All of you know, then ITC is available. So here the dealer of car is using it in further supply. So ITC is available. So see, scenario A, demo vehicle not capitalized, that's okay. ITC will be allowed 1,80,000 because it is considered as further supply of such vehicles. So it is clarified by CBIC that ITC can be availed in such cases. That's about your scenario A. Scenario B, in May 24, company purchases another demo vehicle for 12 lakh on which GST is 2,16,000. The vehicle is capitalized. Congratulations. But no depreciation is claimed on GST component. That is very nice thing that you have not claimed depreciation on GST component. So ITC will be allowed. Okay, absolutely no problem. ITC will be allowed. See, allowed 2,16,000 because demo vehicle. So it's okay. You can claim ITC 2,16,000. But point is, the vehicle is sold after 2 years. If the vehicle is sold after 2 years, means after using it for 8 quarters, then you will have to pay GST. How much GST I'll have to pay in scenario B on sale of such vehicle in future? How much ITC you had availed earlier? ITC that you have availed earlier is 2,16,000. So I'm showing you in scenario B. You had availed earlier ITC of 2,16,000. 2,16,000 minus 40%. Why 40%? 8 quarters. 8 into 5, 40%. So 2,16,000 into 40% is how much? 86,400. So minus 86,400. You will get 1,29,600. So GST payable becomes 1,29,600 or the tax payable on the transaction value. You are selling the demo vehicle for 8 lakhs. So 8 lakh into 18%. Okay. So you will say 129,600 or 1,44,000, whichever is higher. So you will be paying GST of 1,44,000. This happened as per 18(6) because capital goods which were purchased are subsequently sold. Capital goods on which ITC was availed are subsequently sold. Scenario C, in June 24, company purchased demo vehicle for 15 lakh. GST is 2,70,000. Very simple. The vehicle is capitalized and depreciation is claimed on the GST component also. So 16(3), no ITC will be available. See, no ITC. In scenario C, not allowed as per 16(3). Scenario D, company does not capitalize annual demo vehicle purchase for 9 lakh. GST is 162. And now it's okay. ITC will be allowed. But and further it is sold after 1 year for 7 lakhs. So now in scenario D, on 7 lakh, directly pay GST at 18%. Okay. And lastly, because it's not capitalized now, you're now not selling capital goods. So directly 18(6) will apply. 18(6) will not apply. Directly you will take GST payable on the transaction value. And lastly, acting as service provider to manufacturer. Messrs Autodrive purchases demo vehicle from manufacturer to provide test drives on behalf of manufacturer. Okay. So yes, in this case, ITC can be. So in short, okay. In short, in scenario E, acting as service provider to manufacturer means manufacturer is principal and this service provider is nothing but agent. Okay. So principal is now selling the vehicle. That's what. So acting as service provider to manufacturer, Messrs Autodrive purchase demo vehicle from manufacturer. So this service provider is purchasing vehicle from principal to provide test drives, that too on behalf of manufacturer. So in such case, ITC will not be available because dealer, that is the agent, is not making further supply, only providing test drive as agent. So no ITC, it will be blocked. because it doesn't fall in exception. If you were further supplying such motor vehicles, then only ITC would have been allowed. And lastly, in this scenario E, after 1 year, that agent is selling the vehicle for 8 lakhs. So on 8 lakhs, whatever is the GST, that becomes payable. That GST is at 18%. So that 1,44,000 becomes payable. Clear? Yes, sir. So friends, I hope that you all are doing well, and I hope that you all have understood today's session. Of course, tomorrow and maybe day after tomorrow also, ITC only will continue, because you know it is the backbone of GST, and the weightage of ITC itself could be about easily could be about 10 to 15 marks in your exams. So of course we should continue with ITC tomorrow also, day after tomorrow also. Out of the 50 questions, we should do as many questions as possible. So today I would like to write here that we have done question of 16, 49.5, 18.6, 17.5. These questions we have covered. Okay, to some extent 19. Okay, but not others. Only this we have covered. So rest of the questions are pending. These section numbers questions we covered, but others are pending. So of course we will do that in tomorrow's and day after tomorrow's session. So ITC will continue tomorrow also, that is 10-12 also ITC will continue. Okay, so no worries at all. We had kept 2 days backup margin, and plus I'm telling you that if required, we will take more than one sessions in a day. But I have to accomplish the entire syllabus by 17th of December. Okay, so that it will be useful for Jan exam students also. They will get at least 13-14 days in hand. Okay, prior to, I mean, we complete this batch, after we complete this batch. So thank you so much guys for liking this session. I'm 100% sure you have liked this session by heart also, and on YouTube also. And you have subscribed to the channel, you have hit the bell icon, and please don't keep this knowledge and information only with yourself. Do share this video, and so that maximum students across India can claim benefit of this. Yes. Thank you. Bye bye. Take care. Stay blessed.